So we talked about the drive lower, getting involved in the drive lower. The drive, the pullback, all the kind of stuff, the good things that we look for in that. So what happens in the other scenario? So again, sticking in the scenario that we're looking to follow the gap. We're not looking for the gap fill, we're looking for it to continue lower, at least in the time period we're trading, the first few hours, whatever it may be. Or perhaps we're getting involved in a swing trade and we think that this is a fundamental shift in sentiment, and we look to want to get involved as soon as we can after we've seen that news catalyst. We'll talk about stocks in a little bit, but let's stick with this example that we've got with the S&P 500, the Dow, the broad Dow indices, and we've got the SPY up here for clarity. So the gap lower, the push high. This is the other way of trading it. So assuming that then this is our gap, in fact, this is exactly what's happened today, and we'll talk about perhaps some little day trades from this. So the gap is lower, and we start to kind of claw back up. Yeah, it claws back up, and this is the sort of thing you're going to get in a bull market or in an uptrend, guys, on a daily, because the bulls are not panicking. You know, if you go back to the daily chart, if we very quickly flick back over to the 1 day, you know, we are at highs. You know, no one's really stressed out. The only person who's really caught out here is perhaps 4 or 5 days worth of longs who are looking for, you know, a little bit move to the upside. So we're not talking brutal panic here. We're not talking severe, significant butchering of longs or anything like that. And it's not like we're at a low and we've pushed down on a daily trend and we're gapping lower on weak news or something, which is even more, you know, likely just to really shift that supply even harder in that direction. So you've got to look at it in the long-term trend and how the gap fits. Is it a gap up in a bull market, or is it a gap down in a bull market? Is it a range? All those kind of things that are adding to the weight of how you're going to position for the gap. So let's look at a 1 minute actually. I know this might be a little bit too focused for some if you're swing trading, but these kind of techniques will definitely work to finite that entry, or to finesse the entry is the word I'm looking for there. Okay, so the push up and the rollover. How do we kind of judge when we're going to roll over? Now, to me, honestly, if the gap is significantly lower and people are perceiving it as value, going back to the theory of it's an auction process, you are advertising for buyers, you've gapped down significantly. Hello, you know, we've got the market a lot lower than it was yesterday. Okay, we've got some news that potentially is moving this, but do you want to buy it? You know, really, a proper bull market, you'd see it just ripping up and filling the gap. If you see this kind of scenario where it comes up and then starts to struggle, that's the key thing here. It pushes up and it just starts to struggle. You know, it just can't push any higher. Doesn't necessarily roll over straight away, but it just comes up and just sits for a few minutes struggling. Now, many people will confuse that with a bull flag and say, well, that's a bull flag. You know, we've driven up from the lows, we're holding at highs. Yes, if you were in an uptrend and you were driving high and that was the prior day's trade and you closed at highs and you drove high and you pushed there, that's a complete different scenario, which is kind of, you know, I talk about how it's very important to understand where the setup is in relation to the previous price action, either the prior day, the prior week, the prior year, because everything is different. This may well be a bull flag in an aggressive uptrend market, but if we have it after a gap lower, it becomes more of a case of I'm not looking for a bull flag, I'm looking for more of it to stall and roll over. Now, the key thing as a trader, and whether we're swing trading or whether we're day trading, we are just looking to find the entry with the least amount of risk to give us the most amount of reward. So it's not just about the risk reward for me, which has got the risk reward ratio, of course, is a very important metric to use, but it's also about the probability of success. Now, that's a very difficult thing to quantify. Risk reward is much easier to quantify, and although we can kind of arbitrarily put 10 tick stop, 100 tick profit, or 100 tick whatever it may be, and go, okay, that's a 5 to 1, 10 to 1, 3 to 1, and make it up ourselves, it's still a little bit down to, you know, whether the market's going to go there or not. And the same with percentage. The percentage for me is how likely the trade is going to work. Now, if you're buying, you know, a bull flag, very strong bull flag, the chance of that going higher at some point in the next hour are more than 50-50. And that, again, that's not from back testing and stuff. I'm sure there's people out there who have back tested this kind of thing. But for me, and from my experience, I know that if I do that the right place, the odds of that working are going to be high. So if I can add to that a risk reward and a percentage, this is kind of when the trade is on my side. So looking back at the gap scenario here, we've got the gap lower, pushes up not much. Now that's the key to this trade, guys, is that you've got a gap lower, a big gap. Let's look at this in terms of this SPY here. A big gap lower. the push up is very, very small relative to the gap. It's not like we have driven all the way back and we're holding up here again, which is a different scenario than what we've got here. We have pushed up, and actually if I just get a kind of fib, but I've adjusted my fib to suit, where's it gone? There she is. We can kind of look and see that in reality, if I'm going to use the low actually of that point, you know, we have only pushed up 25%, so a quarter of the move, and that's where we're struggling. So that gives you a hint. That is the little, if there's a secret, rubbish word to be using in this game and overused, but if there only was a kind of secret tool, then that would be it. And it's not very secret, is it? But it's just judging to see how strong the gap is, and how strong the drive is relative to the gap. So we're kind of now layering our edges. Big gap lower, underneath the prior day's low. The pushback is very, very weak. We want to get involved now with a drive in the same direction, a continuation of the gap. You know, how do we start to do that? So in this instance, we're just going to look and see that things are stalling here. And what I'm going to do is I'm going to flick over to the Dow Cash CFD, because that's predominantly what I guess most people will be trading. Now, it's worth noting here that obviously this is the gap, so we're not going to see the gap as much, but we know what the gap is like. But this is just to visualize this kind of first 15 minutes of trade. Now, I mentioned about 15 minutes being a sweet spot. Let's put the 15-minute marker in as well. You can see how we push up, and we struggle. We just struggle. You know, this is kind of where you go, listen, I don't know if I'm going to be right here or not. However, I've seen us push this high. We've pushed a high again. I've seen several minutes us not be able to break that 28.20 level. So I'm going to take a short, and actually in this scenario I did take a short, a little bit lower. Obviously taking it up there, you've got this little window of opportunity here. There's no point in trying to be too clever with it. If you can get it within a kind of 10 tick range based on this move, then all good. You don't need to finesse it that much when you don't really want to be chasing it down here. But this is kind of what you want to do. And then I can quantify my risk, and I can say, listen, my stop is up here. It's a pure play on this. There's nothing else to look at. It's purely a play on, hey, it's gap lower. I've got all these things adding up for me. I'm going to take it. If I'm wrong, I don't care. If I'm right, then my thesis is we're going to retest the low at some point. Now, obviously, we've gone a lot lower, and now we're trading an awful lot lower than that. But you've got to have a thesis in place. And, of course, with trading, it's not about getting the whole move, it's about getting the high probability meet. And if you've seen this gap and you think it's going to roll low, and you can try and finesse it, and you've gone into the day and you've said, listen, everything's lining up for me, all I want to do now is find number one, if the trade is showing attributes that it's going to work. In other words, is it stalling, is it pushing up and stalling? And number two, where can I take the trade that's going to quantify my risk in the right manner? Now, it doesn't mean, listen, I want to take a 10 tick risk, I'm going to hit it here and put a 10 tick risk here. It makes no sense. You've got to use it in a place that's obvious. So if that becomes a short-term resistance, then you want your stop above there. And there's going to be people who look at that and say, well, that's ridiculous, it's going to get stopped out more often than not. I will disagree, because if you're timing it right, even if that becomes a 50-50 trade, which I know is more than that, because I've seen these gaps lower, I've seen them struggle, I've seen them then roll over. This is a pattern I like to trade regularly. But even if it was 50-50, the fact that your obvious target or your sensible target is the low at this 27.60, your stop is about 10 ticks, 12 ticks, something like that, and your target is 50 ticks, that is a really good risk reward scenario. And if you wanted to look at swing trade perspective, you can even go in and say, listen, I'm going to take it, I'm prepared to come out if it goes against me here, but I'm going to sit with this thing. I'm going to sit with this thing because I think this is the market's going to turn for the next 4 days. And before you know it, you've got a humongous risk reward ratio. You've got a 10 tick risk, and all of a sudden you've got something like a 400 point target, which is quite sensible on a daily chart. So it becomes quite powerful. And I'm not saying this happens and works every time, but it's just looking for these little clues in the market that are going to give you an idea of whether this gap trade is going to work. And very quickly, before we flick on to the next video, the targets that you would have for this are going to be the low. Now, that's purely my day trading routes coming out here, because I want to look for the most high probability. And for me, the highest probability is that we retest the low. I'm cautious about looking for more because we're in a bull market. Now, obviously, hindsight, if you had sat with it, very, very nice. You're in here and you're still in here. it doesn't get any better. But for me, hindsight is useless. I'm interested in the high probability stuff. So often we get in bull markets, when we get those gaps lower, that's the close, there's your open, you drive higher, you know, we retest, sometimes we do that, and I just don't want to be involved in that. I'd rather take it out, done, dusted, move on to the next trade. There's going to be another opportunity later on in the day. So again, lots of things to think about there. I love gaps. Let's look at some more in the next video.